Hello everybody, how are you doing? Welcome again to yet another webinar with FX Educast. I'm your host Munther, Marji, and I'm going to be spending 3 hours today with you, just like we have been doing all this week, looking for the best opportunities in the market. A quick reminder that this free webinar is sponsored by QTimeFX, our favorite Forex broker, who is offering you unbelievably tight spreads. Imagine yourself trading with only 0.4 of a pip on euro, dollar, and dollar yen, and with zero commission. Not only that, we are offering our clients $500 in withdrawable bonus, guys. Okay, so contact us at fx_educast via Telegram, and let's open your account where you can follow our analysis. You can establish trades and positions upon these trading sessions that I am sure you have seen that they are capable of spotting some of the best trading opportunities in the market this week. Welcome. Very nice to have you here for another day. And of course, we are going to immediately start with analyzing the market. And we are going to pick up from where we stopped yesterday, or we're going to start the same way we started yesterday with the euro. And I have something to show you that relates to yesterday's analysis, and that is, of course, the support that we talked about yesterday. Before talking about any more details, I just want to tell you, remember we said that 1136 is a good price to buy, and I want you to see what happened after reaching 1136. As you can see, we dropped to the 30s, reaching a low of 30, exactly 30. And after that, we started recovering again and approached 70, very close to 70. We were trading at 66.6. So we're talking about 30 pips above the recommended buying level that I have recommended you go long at yesterday, which is something, of course, good. I like it when these things happen and that we can follow quickly. You know, when you are giving a recommendation to your valued viewers or clients, and then the next morning you can tell them about what happened to it. So if you followed our recommendation yesterday of buying the euro at 1136, you will be in about 25 to 30 pips of profit right now. Now, that is great, but our mission for today is to estimate if this is going to continue, if we are going to have more profit or not. Of course, every day I'm going to give you fresh recommendations, so that's why I recommend that you close your position when we start the next webinar and wait for the fresh recommendations of the new day. Okay, guys, so this is a situation that I really like, and of course how did we reach the conclusion that 1136 is a good place to buy? Of course, we used previous daily highs to establish a rising trend line on the hourly chart, and after that we calculated the retracement levels for the last part of the move, and using both, of course, at the time of the analysis, the high was there. That's why the retracement tool is calculating the retracement levels up until here. Of course, later on, we could have done this if we were following the market. And of course, it's not going to result in a lot of difference. We were recommending a buy at 36. If you did this, you would be buying at 38. In both cases, we bought in the 30s, and now we are in the 60s. That's good. But is this the end? Is this the highest price that the euro is expected to reach in recovering from yesterday's low? This is the most important question that we are going to try to answer today. And one of the important things today is the NFP. Probably the most important thing on the agenda for today is the monthly report of the Department of Labor, or as traders call it, the jobs report. We are going to wait for the numbers coming from the biggest economy in the world to know if it is still generating jobs at the pace it has been for a long time. It's an explosion of jobs. Unemployment rates, the main unemployment rate and in demographics, both are at very, very low levels. But the expectations for today is a number below 100,000, which could put some pressure on the dollar, especially with 3 rate cuts so far. So we can assume that the market would understand a weak number today as a reason for another rate cut. And maybe that is going to happen. And if that happens, then a weak number, a number below 100,000, would be a good thing for all other major currencies aside from the dollar, of course. So the dollar is expected to come under pressure if the number, of course, is weak. But I'm sure if you have been following this number for a long time, you can see that its influence is not as much as it used to be, because a few years ago we had a problem, especially coming out from the financial crisis of 2008. We had a problem with the jobs market. We wanted the economy to show that it is generating opportunities for people who want to work in order to keep the economy going. We all know, of course, that jobs are very, very important for a healthy economy. More jobs means that the economy is moving and more help is needed in production of goods and services. But not only that, when you have more jobs, of course, you have more people having income, and these people who have this new income are, of course, immediately injected into the economy as consumers, and this is very important. So more people making money, more people having jobs, more people on the payroll means more consumers for goods and services. And as we all know, the American economy is not one that depends on exports. That's why they depend on the local client, local customer. So the local customer is moving the economy, and that's why we need a good number of people working. At the moment, we have fantastic numbers coming from the American job market. So up until now, everything is great. Nobody's worrying about jobs. The past couple of years were amazing for the job market and for job creation in the United States. But will this go on? Or will the market start worrying after 3 rate cuts? Probably some of traders or a part of market participants will start asking themselves, well, what if numbers start to get bad around now after reaching these great numbers? Will the Fed be able or willing to make fresh rate cuts on the dollar? So we're gonna have to wait. The number is in about 6 hours and 17 minutes from now, and I know I have viewers from different continents that I personally talk to, and I know where you guys are located. So I know that some of you would be right there in front of the screen when this important figure comes out, and others would be sleeping at that time. So for people who are going to watch what will happen when this number comes out, I think that you should really pay attention to it. You should be ready to control any position that you may have. The overall environment that I really support here, remember yesterday we talked about the euro, expecting the euro dollar to go up. We were expecting the dollar yen to go down, and both things happened. I'm sure you noticed that. The 2 predictions were perfect. So from these 2 predictions, you can understand that the dollar, we're not expecting the dollar to achieve gains under the current market conditions and the environment that we are going through with the Fed cutting the rates for a third time this week. So the thing that we should be expecting now is more dollar weakness. This is what I really believe. But of course, I always ask the charts. I don't follow my bias or my wishes. I ask the charts. So we are going to analyze the charts. And of course, as always, we are going to start with the euro. So the euro, guys, we were talking about, of course, this fantastic setup yesterday, which helped us achieve some profit from buying into the 30s. Now, if you have a position, I hope you close it right now, because we don't know, maybe later on, as we analyze the euro, maybe we will find another level to get in on the long side of the market, or maybe even, which is, it's not probable, but of course it can happen, we can change our mind after looking at the charts for today, and maybe we will be looking for an opportunity to sell. That can happen, of course. It's not probable for today under the current market environment that we believe in, but who knows? That's why I really believe that you should follow these recommendations on a day-to-day basis, because a buy yesterday could turn into a sell today. And that's why when you follow our recommendations, I prefer that you close your positions the next day and wait for fresh recommendations. Okay, guys, so we are going to start with the euro immediately. Now the euro has been rising, of course, as you saw, and we were recovering all month long, and that is something that is good. Because we are on the first day of a new month, on November, of course, let's take a look at what happened on the monthly chart. I want to see what kind of candle October left behind, and as you can see, we have a fantastic month, fantastic candle representing the month of October. As you can see, this is the best month for the euro in quite a while. Just look at this chart. No previous month in recent history achieved this kind of gains for the euro. Even in June candle was smaller than October candle. And if you go back on the chart, we don't have a green candle that is this size or more until January of 2018, and that has to mean something. This is the best month for the euro in almost 2 years, in 22 months to be exact. This is the best month for the euro. That is a good start. Another thing, as you can see, if you know your candle patterns, you know that this is a sort, of course, in Forex, sometimes the patterns or the candle patterns that we follow and really believe in that require gaps in Forex, we neglect the gap condition. Okay, we don't really focus on having a gap, because on a day-to-day basis it is extremely hard to get gaps in the Forex market. And that is, of course, because it's a 24-hour market. When we talk about stocks, of course, we close today. We have the market closed for a number of hours, depending, of course, it's different from one country to another, from one market to another. But the fact is still the same. We close for a number of hours, and this period of market being closed on a day-to-day basis can generate gaps. Okay, it's easy to see gaps all the time in stocks, but in currencies it is much harder. But it usually appears only on the weekend. And because we can close on Friday on one price and open on Sunday evening on another price that is much different. But how can we close on Tuesday and open Wednesday 1 second later with a huge price difference? That is very, very hard to attain. So we do not have when we have candle patterns that require gaps, we do not need to focus on the gap when we are talking about Forex market. This is a pattern, this is an engulfing pattern in my own opinion. It's a strong engulfing pattern. It is bullish, of course, as you can see, and in an engulfing pattern, what we need the price to be doing is to open below the previous candle, which is a gap. Of course, we can neglect this because we are currency traders, and then close above the top of the body. We are not talking about shadows here. We want the body to cover the previous body completely. And when these patterns appear under a certain environment and with certain conditions, then they indicate reversal. In this case, the conditions are, of course, we need to see the price falling, and then we need to see a low that has not been reached before, and of course the lowest price in this drop, in this more than a year and a half of dropping, almost 2 years of falling, the lowest price was seen on the first day of the month, October 1st. From there we started recovering, and as you can see, guys, the recovery has covered the body of this month, has covered the whole body of the previous month and the one before it. So it's not engulfing only one candle, it is actually engulfing 2 candles, and this is usually a strong reversal indication. So that is yet another reason for us to believe in our expectations of the euro going higher. We have been talking about this for a long time. I have been telling my clients and my daily report, we need to start looking for a bottom, a long-term bottom on the euro, and that was maybe 2 months ago. I really believe that this is happening right now. We may be in front of a fantastic opportunity to go long with targets of hundreds upon hundreds of pips. So to finalize this monthly analysis, I just want to take a look at the indicators, and of course, first of all, I just want to remind you that the conclusion of our analysis of the monthly chart is that we do have a bullish engulfing pattern, and it's a strong pattern because it did engulf not one but 2 bodies on the monthly chart. So we opened on August, actually this is August, we opened August on at 1070, 1069, and we closed October at 1150. So it is a good close. It's a very good close. We have engulfed 2 bodies, and that is bullish. This means that we should be expecting the euro to continue moving higher. What about the indicators? The RSI, during the formation of the long-term bottom, I hope I'm right when I say that, did touch, let me say, or came extremely close to oversold levels and then started changing direction. The stochastic indicator with the close of this month gave a buying signal. Of course, the fast is crossing above the slow, and that is a buying signal in the stochastic analysis. The MACD is not giving signals here. It gave a signal many months ago, a short signal, but it is still not giving a long signal yet. I think we need to see some action to the upside before other indicators confirm that. But we start with this stochastics. It's the first indicator generating a buy signal on the long term, guys. This is a monthly chart, okay? So the importance of a buy signal, or a sell signal, of course, on the monthly chart is not as much as it is on a 5-minute chart. You need to understand the size, the magnitude of this buy signal. Okay, so another reason to believe that the euro is going up. Now we have two reasons on the monthly chart. The candle itself, it is an engulfing candle, strong bullish engulfing pattern, and the stochastics has generated the first indicator signal, let me call it, the first indicator signal, the first signal to buy among the indicators that we follow. We are still, of course, trading below the moving averages. The RSI did not go inside the oversold area, but it is changing direction, as you can see, which is positive by itself. MACD is on the sidelines. It's not participating in this thing. Now, this is important. The moving averages are the next hurdle, in my own opinion, on the way higher. And we are still a little bit far from them, but we hope that in the future, in the very near future, we are going to challenge these moving averages. For this month, they are at the 49 is around 1325, and the 35 is around 1455. So keep these numbers in your head if we start moving to the upside. Okay, guys? So I really hope you enjoyed this long-term analysis, because we were using a monthly chart. The bottom line is that we have two reasons to believe that the euro is going up on the very long-term chart. The monthly chart, the candle itself, we have a great close, and stochastics. Other indicators are still not generating a buy signal. So we have two votes for the euro going up, and they are coming from candles and stochastics. This is the summary of the long-term analysis for the euro. And with that, let me just take a look at your comments, guys, and your chat. Julie, hey, how are you? You're here again, and I'm happy again because you are here. Thank you for being with us for yet another day. And thanks for our moderator for following up and welcoming everybody. Georgios, am I saying that right? Hi, buddy. Euro Swissy. Okay. I will do that. Michael is asking about how to claim the bonus. Of course, Michael, you need to open the account. You can contact us at fx_educast via Telegram, and of course we're going to help you with everything. So contact us there, buddy, and we're going to answer you. So in order to claim this bonus, of course, you need to open a real account and deposit in it. So Michael and Min KZ Kamakazi is asking the same thing, how to claim the money. Of course, the same thing, buddy. You need to open an account with us, and let me remind you again, contact us at fx_educast via Telegram, and we will be very happy to help. Okay, guys, so up until now we have one request, and that is the Euro Swiss. Of course, I'm going to do that, but the Euro Swiss, Georgios, is one of the boring rather boring pairs. Don't you agree? I don't think it's the kind of pair that moves 1,000 pip or is going to generate the same kind of excitement that the euro dollar is going to generate. But of course, I'm going to do that. Okay, and I'm gonna do it immediately after finishing the euro. So we are done with the euro for the long term, but now let us focus on the short term. And as you can see here, we are achieving some kind of gains. We have been achieving gains for quite a while, for about 5 weeks right now. We have been rising or actually around 4 weeks. We have been rising. Now, is this it? The first thing we need is a trend line on the tops. Let's see, where are the bulls facing problems. And as you can see, we do face problems when we approach 112. When we go above 11 and a half and start moving towards the 112, that is when problems start to appear. On the 18th of the month, the high is 11.83. This is the highest price in 29 months. That was a Friday. So the next Monday when the market opened, on the 21st of the month, the high was 80, 79.5 to be exact, 80, and that was, let me see, 3 pips. 3 pips below the previous high. And this week, the highest price, which we did reach yesterday with the help of the Fed, of course, and the rate cut, 11.76. So guys, even with our excitement about the euro going higher, we cannot neglect this. We have a daily high, and all of them are in October. We have a daily high at 11.83, 11.80, and 11.76. How can you neglect that? It is really obvious that we are facing problems in this area. Between 76 and 83, we have 7 pips. So in these 7 pips, the bulls are facing problems, and they have tried 3 times to overcome this barrier with no success. Unfortunately, with no success. An update for Michael. Michael, you want to open your account, please contact us via the links that we are providing you on the chat with. Okay, you have also Skype, Telegram, or Skype. With the links are in the chat, so please feel free to contact us. And of course, buddy, you're going to see how much we're going to help you with everything. We have a great team, very friendly, and we want you to make profit. That's why we have these sessions in the first place. This shows you that we are the kind of broker who is happy when their clients are making money. And I don't want to say anything, but I'm going to say just a little bit. Not every broker is happy when their clients are making money. I'm not going to say anything else. So we are the kind of broker that is going to be extremely happy when you are making money. We are on your side. We want you to make profit. So contact us and see how much we're going to help, because we really want to help, and we really want to see you make money and trade more and more and more and more. Okay, guys, fantastic analysis up until now, isn't it? Right? Yesterday, buy in the 30s. Now we are 30 pips above that. That's great. And not only that, but the buy recommendation from yesterday was extremely close to the daily low. The daily low, after, of course, we analyzed the market, the price dropped to 30. Our buy recommendation was at 36. So we are talking about 5 pips below our recommended buy level. Why did I say 5, not 6? Because, of course, you need to have some kind of spread, even if it's 0.4 of a pip, like the one that we have with QTime FX, or a pip or so with other brokers. You need to have 1 pip for the spread, of course. And that is why when we say that the lowest bid for yesterday is 30, the lowest ask would be around 31, and we recommended to buy at 36. So it was only 5 pips below our recommended level of buying. And with this, of course, we are happy. We closed our position. If you followed my recommendation to close your positions on a daily basis, now we're looking for another position. So one of the things that I have been noting here is that the recovery from yesterday's low does not look really strong to me. I like it, but the internal structure is not the kind of the one I want to see. I really believe this could be hurtful for the euro. If this count is correct, then we will probably trade below yesterday's daily low. Okay, still, even with that being said, the overall picture is still extremely positive. So it's okay to reach a lower level than we did yesterday, because we are still really and heavily supported by many support levels and by an overall extremely positive atmosphere. In an uptrend, there's a misconception about trends. People believe, or of course not everybody, but unfortunately a large number of people think when you tell them that the euro is in an uptrend, they believe that uptrend means it's not going to go lower ever. No, inside the uptrend we're going to see up and down moves, but the overall result of the period of time we expect the price to be in an uptrend should be a net gain for the price. So we start maybe at 108.80, for example, which is October 1st low, 108.78 it was to be specific. And then we go up and we go down and we go up and we go down. But what is the overall result of the move in this period of time? Of course, it is net gain. So we started here, we go up, but we do go down. How can this move appear in a downtrend? Some people believe, whoa, you said, sorry, in an uptrend. You said we are in an uptrend, but we dropped, what, 50, 60 pips here. We dropped more here, and we dropped much more here. Okay, so we dropped from around more than 100, around 110, 120 pips between the 18th of the month high and the lows that were seen after that, but we resumed our movement to the upside. So guys, especially the new ones, of course, I know that people who have been in the market for a long time know this, but for beginners, this may be fresh information. When we see a trend, when we estimate that the market is moving in one direction, that does not mean it's going to move in a straight line. Of course, it's going to move up and down if the market is in an uptrend or in a downtrend. In both cases, it's going to move up and down, up and down. But what we need to focus on is the net, the net result of the period. And as you can see, the net result of the period is extremely bullish. We started here, we closed the month here, so we are achieving some gains. But inside these gains, of course, we have periods when the price moved to the downside. This is the most notable one of them. We have this one as well. We have things like this on the way higher. So that is why if we start falling today, that's not the end of the world. In fact, when you see a movement against your expectations and you still really believe, and you have reasons, of course, on the chart to believe that your view is supported by technical analysis, then you should view that as a fresh opportunity to establish new positions. So no worries if the euro is going to fall below yesterday's low, then in my own opinion that can be a very good opportunity to go long again. And with today's number, what can happen is this: we can get ourselves a good strong jobs number for the dollar. The dollar is going to rise, and then later on maybe the markets will start thinking that even with this good number, we don't know what the Fed will do. It might cut rates again, and that mentality in the market will push the euro higher again. In all cases, a drop today is not the end of the world. We do have an ABC on the chart, as you can see. This is my count, and this count will become invalid, of course, only with a break above yesterday's high, 76. I hope it breaks. But if it does not, and we start falling, I have zero problem with that. And in this case, I will be looking for opportunities to go long. One of the things I use is, of course, as you saw so many times, is the retracement level for the last part of the move. This is a tool that I use all the time. And with reaching the 38.2 yesterday here, we should be looking for lower levels. The 50% is also extremely very close, and the 61.8, and I really always prefer to use these two numbers, 61.8 and 71.4, as my main support area. If I see the euro dropping to this area, I would click the buy. Okay, If I, of course, if I don't break this area. If I go fast through it, no, I'm not going to buy. But if I see that the price is dropping to this area and the daily low is there, it's inside this area or around it, very close to it, I look at the daily low, I look at the area, I see them extremely close to each other, and that by itself is an indication that this might really be a good area to buy again, to re-establish long positions. So the area is between 11.15 and 11.06. We are trading in the 60s right now, so we might drop something like 60 pips, 50 to 60 pips, in order to reach inside this area. And if we do find a low inside this area and start recovering, I would recommend a long position. So where should we get in? Is it 15? Is it 6? Actually, here it is subjective because it's an area. Some people like to jump in when we touch the area. Others think that no, the price is going to push deeper inside the area, so we need to wait for a better price. It is all in all, it is 9 pips, so I'm gonna start recommending for today 11.15. Do you like it when I write it like this or like this? Let me know in the comments, okay? I use the short form 11.15, but in order to make things extremely clear, I will put the whole price, the whole code. 11.15, so we buy at 11.15. A stop should be, in my own opinion, below, of course, the support area that we were talking about for the whole week, and it was between 10.63 and 10.86. We found support many times inside this area, the last of which was when the Fed announced the rate decision. The low was 10.79 inside this area. Remember this area, guys, 10.63 to 10.86. We talked about it time after time after time. It is a key support for the euro at the moment. So if this key support is broken to the downside, I want out. I don't want to hold on to my long position anymore, and that is why I will place my stop below 10.63. 20 pips is enough, so 10.43. And let me adjust that like this. This is not what I usually use, but I want things to be clear. Now the limit, we have been talking about the limit for a long time as well. We do have a short to medium term Fibonacci level at 1209, and I really think that this is the minimum that we should hope for in the near future. We also have another retracement at 1260. So if you want to get out fast, and of course it's Friday, so if you're like me trying to go home on for the weekend on an empty stomach, no positions at all, then maybe 1209 is enough. But if you want to hold on more for a longer time, 1260 makes sense. So let me change this to target 1 and target 2. So I don't like multiple targets, but for this time I'm going to give you 2 targets. It's not what I usually do. I like to have one. In my own opinion, if you want me to pick one of them, I'm going to pick 1209. It's Friday, and we don't want to be too greedy looking for a lot of profit and seeing that profit not coming and then holding a position for a long time. I don't want to do that. So this is the first recommendation for the day, guys. Buy euro at 11.15, stop at 10.43. How many pips is that? 72, right? Target 1 is at 1209, and that is what, 94 pips. And target 2 is 1260, which is 145 pips. I hope both targets will be reached if we drop to 11.15 and we are long. Okay, so what if, now there's a what if, of course, what if the price does not drop to 11.15 and resumes rising from current levels without dropping that much? Of course, we were talking about the resistance with 3 daily highs between 83 and 76. And once we start trading above this resistance, I also want to be in. Buy at, so it is 1183. The resistance itself starts at 76 and it stretches to 83. If you are eager to get in, you can use 76, but if you want to wait until everything is clear, it's 83. And overall, it is only 7 pips between the two decisions. They should not be a problem for your trading. To me, I would go for the 76 this time because it's this week's high, and because the 1183, now I have a problem with this high that we saw on the 18th of the month. The 1183 did not appear on the price screens of all brokers. It was different from one broker to another. Why? Because it happened in the final moments of trading. So at some brokers it was reached, some brokers no, it stayed maybe 10 pips below that or something like that. So that's why 83 is not, although it's the highest price seen recently, it is not what I really want to focus on. I'm going to use the clean and clear high that we saw after the Fed, which is 76. 1176 is going to be my entry. So no, sorry, it's going to be my resistance, and I need about 10 pips above it, so 1186. Okay, now with this entry, of course we cannot wait for our stop, and we cannot wait for the stop to reach the support area that we are really interested in, 1063 to 1086. I cannot wait that long. If I place a stop, I don't want it to be 130, 140 pips, because the previous stop, as you just saw, was at 43. So if I place the stop at 1043, that would leave me with 143 pips of stop, and that's too much. So what I need to do is I need to look for a closer level. And remember, when we talked about this area, we said that we have an immediate support between 1106 and 1115. So once we start trading below this area, 10 pips below it, that would be a good place to place your stop. Okay, so now it's 90. It is still a bit higher. Of course, I prefer to be around 70 all the time, 70, 60, between 50 and 70. That's my favorite number of pips for stops. I don't like very close stops. I don't like that because they are hit often, and I don't like large stops because one stop can make you lose 150 pips. I don't want that to happen to me. So I usually prefer to have my stop around 55, 60, 65, 70 pips, something like that. Here it is 90. So what we need to do is we need to accept this or try to cut a little bit from the entry and the stop. We have the resistance at 76. What about only 5 pips above it? That would be risky, to tell you the truth. You know, sometimes I really don't like to do that, but other times I find myself forced when the stop is too much. So how about this? We cut 5 pips from the entry and 5 pips from the stop. You would be extremely unlucky to see the price reaching 81, triggering your buy, but without reaching 86, and then dropping. If you place a buy at 81 and a buy at 86 and only one of them is hit, that is really, really unlucky. So I would assume that if we reach the 80s, it doesn't matter if we are at 81 or 86, and that is why I'm going to place my order at 81. What about the limit? It is the same. Okay, let me call them targets here because we do have two, target one at 1209 and target two at 1260. Okay, and that's it. So these are the two recommendations for now. For the second day in a row, I am not going to issue a short recommendation on the euro. I do not believe that if the euro starts dropping, that's a very attractive opportunity to get in the market. I believe that if it starts dropping, we should look to buy, not look to sell. Now, this is going to be my opinion for today, but who knows, after the NFP, maybe we will be dropping enough to break one of the important and key support areas, and that can change our minds. For example, if we reach the stop here, that could indicate a lot of weakness. But since we are trading more than 100 pips above that at the moment, even if we drop to 1043, I'm not going to take my chances and take the risk of shorting something that has been dropping for more than 100 pips with a daily trading range as, let me call it, not modest, but moderate, like the euro dollar. So other instruments, they move 300 pips a day, 400 pips a day. And for such instruments, if it drops 100 and you see that the technical analysis is pointing to the downside, okay, it's okay to sell. But something like the euro, it hardly reaches 100 pips. You know, most of the days, take a look at the charts, recent charts, how many days we had more than 100 or 120 pips in one day. That is not the case for most days. So now we are in 1160s. To sell at 1043, I don't know, it does not make a lot of sense. But if I were long and we drop to 1043, I want to cut my losses. I don't want to lose or risk more than that. That's a different situation from initiating a new short position. So these are my recommendations for today, guys, and I'm gonna place them. Okay, let me, sorry about that. Okay, so the first one is a buy at 1115, stop at 1043, and I'm going to use 1209 for both trades. Yes, keep it at one lot. 1115. My stop is 1043, and my limit is 1209. Okay, placed, great. Okay. My other order is a buy stop. And if you don't understand the difference between an entry level, an entry limit and an entry stop, please ask and I will be more than happy to explain that. So 1181, 1101, the stop loss, 80 pips. And of course, now we cannot use such a very close limit. So I'm gonna use 1260 here. And even 1260, you know, I would like to. There is another retracement level at 1298. You know what? I'm gonna change this to 98. I'm going to update this on the screen here. This limit is extremely close, so I'm going to completely neglect it. I'm going to change it to this. Now, take a screenshot of these two recommendations and the orders we have just placed, and let's see what will happen to them on Monday. Okay, guys, so this is it for the euro. No shorting recommendations for today, but two buy recommendations. If we break above 76, I would recommend, if we start trading above 76, I would recommend a long position. If we drop to the 1106 to 1115 area, I would recommend a buy position. The only thing that's going to change my mind, at least temporary, is a break below the key support area we have been talking about for days now, 1063 to 1086. Without breaking 20 pips below the bottom of that area, I would not ditch my long positions, and that's why my stop here is 1043. Okay, so this is it. Jacob, welcome, buddy. Nice to have you with us again. Mary Jane, welcome. Hi, hello. Harry, hi guys. Hi everybody. I hope you are having a wonderful time enjoying this. I hope you liked my very long-term analysis. Please let me know if you are interested in such things or not. I'm doing it because it's the first day of the month. I wanted to take a look at how the candle for the last month was formed and what shape it left behind, and we found a very interesting thing. So I'm gonna do this for all the instruments that we'll be talking about today. We're going to take a look at the monthly charts, and we are going to try and find something exciting on every chart, like we just found on the euro. On the monthly chart, we had, let me remind you, an engulfing candle on the monthly chart, and two, we had a buy signal generated from the stochastics cross. So with this, guys, I am going to take a break, a very short break, 5 minutes, and after that we are going back to what we are doing and what we are enjoying, which is of course analyzing more instruments and finding more trading opportunities. Up until now, I have one request for the Euro Swiss, and I'm gonna do this when we come back after the break. If you have any kind of request for any instrument to be analyzed, please shoot. Let me know what you want, what you need, and I'm here for you, and I am here for you, and I'm doing this for you for free because of the generous sponsorship of QTime FX, our favorite forex broker, which is offering you fantastic spreads, fantastic, absolutely fantastic spreads, very low, very tight spreads, which will make it easier for you to achieve profit in the market. Even if you are targeting a very small number of pips, you're going to find this easy to do with such very tight spreads. And these spreads come with zero commission. This is the best part. We don't lower spreads and then ask you to pay commission instead, because that would be, the same thing as paying a large spread. But here, no, we don't do that. We give you very tight spreads, very low spreads, absolutely zero commission, and to top that, we are giving you $500 in withdrawable bonus. Withdrawable, guys, this is the word, this is the magic word. It's not a trading credit, it is a withdrawable bonus, real money in your account as a gift from us to you because you have chosen us to be your broker. So come on, contact us at fx_educast via Telegram, and let's open these accounts for you guys so we can keep this sponsorship going and keep these webinars happening every day, helping you find the best opportunities in the market. Like we did yesterday with the euro and with the yen, we had two fantastic analyses and two fantastic recommendations, and I'm going to try to do that for you every day, to give you fantastic recommendations every day that will help you achieve profit in the market. So this is it for the first hour of today. We're going to have a 5, 6, 7 minutes, something like that, of a break, and then we are going back to the charts again. So enjoy your break, guys. Please send me if you need anything analyzed, and I will be checking your comments when I come back. Take care, big people. Okay, guys, how's everybody? I hope you enjoyed your break. Very short break. Welcome back. How's everybody? How is my people? my crowd, my team, my brothers and sisters, my fellow traders. How is everybody? I hope you guys are doing great. And this is the second hour, of course. We're going to continue talking about the market. We left after analyzing the euro, and these are the two recommendations. We placed orders for them today. Okay, so the first request I got for today is the euro Swissy, something that I usually do not look at, and there's a reason for that. And the reason, of course, is that it is something that does not generate very large targets when you are trading it most of the time. But of course, nothing moves in the same way all the time. No instrument does that. So even instruments that a lot of people think of as, they are not the instruments that they move a lot. Sometimes they do move under some conditions because of news or major events that affect only one of the two parts of this pair. It of course moves strongly. So let us start with the monthly, just like we did with the euro dollar. This request was submitted by, I think, Georgios asked me for the euro Swiss. Please feel free to ask for any analysis that you want. So, as you can see on the monthly, of course, we have been dropping and dropping and dropping. The euro was worth much more than the Swiss franc, but with time, the Swiss franc is getting stronger and stronger. I'm sure everybody remembers this, of course. January 15th, 2015, a Thursday. It was morning. I was just watching the market, and then boom! One of the craziest moves I have ever seen in my whole life. And of course, it came when the S&P announced that they are not going to defend the 1.2 rate between the euro and the Swiss anymore. And they're going to leave it for the market. And in a matter of minutes, this pair dropped, I think, something around more than 3,000 pips in a matter of minutes. It was a crazy move. It was unbelievable. It was nothing I have seen before or after in 19 years of trading. So this was a huge event. And after that, market came back to being normal. So the monthly analysis, of course, starts with looking at the candle of the previous month, which even September candle is bullish. As you can see here, guys, after dropping, we have found support around 108.50 to 108.10. We have 3 monthly lows inside this area here, August, September, and October. And when you see this kind of behavior, that is reversal. What kind of behavior am I talking about? A drop, then a candle with a very small body or no body at all, a doji, or spinning top of some sort, and then a strong candle to the other side, in the other direction. A strong candle, when I say a strong candle, what I mean is that a candle with a large body compared to the size of the whole candle. Of course, the size of the whole candle is between the low and the high, and that includes the wicks, of course, but if the body is small, that's not a lot of meaning. If the body is large, that is better. And that is why candles are drawn like this. The shadows or the wicks are very thin because they have little importance, and the body is wider because it has much more importance. So I want to see, when I'm looking for a strong candle, what I want to see is the body being large, not the whole candle. Even if the whole candle is large and the body is not very large, that can be understood in more than one way. But when we have a strong body like this one, the body of the monthly candle of October, then this is reversal, guys. And this goes, of course, very well with the expectation for the euro to rise against the dollar, because this is another indication that the euro is going to the upside. Now we have the euro against the dollar having a fantastic candle on the monthly chart, and now against the Swiss franc it is also having a fantastic candle on the monthly chart. So we are 2 out of 2 so far for the euro. Everything is working in the favor of the single currency so far on the charts. Okay, now what I want to see after that is, does this area that we have 3 consecutive monthly lows in, does it have a significance from a retracement point of view? Well, we can say that it's, of course this is a monthly chart, so we will have to be flexible if the touches are not exact. But Charles Dow, who is to a lot of people the father of modern technical analysis, at least in the Western Hemisphere, he mentioned 3 retracement levels in his work: the 1/3, the 2/3, and the half. And the 1/3 is, of course, 33.3. I think he said 33%. I use 33.3. I don't know why. But the 1/3 is 33.3. It's not 33%. And this level is at 71. Now, the past months we had a low at 35, 11 or 12, approximately 12, and 52. So between 12 and 52 in these 40 pips, we have 3 consecutive monthly lows. And the top of this area is extremely close. It's about 19, 20 pips above, below the retracement level, the 33.3% for the long term. So we might have something here. But we need more. We need more because we are dropping. We are still dropping here. On the long run, of course, I'm talking about, you can see this drop, I'm sure. A, B, C, D, E, okay. So this is it. Yeah. Now, if this is an ABC, then this pair is going to explode. And it's going to go back above that level, that magical level that caused the 2015 collapse, 120. Okay, as you can see, we have approached 120 here, or actually we touched 120, and that was in April of last year for the first time in more than 3 years. We came back to the level. This level was defended by the SNB, guys, the Swiss National Bank, the Central Bank of Switzerland. For a long time, it used to say to the markets, if you guys push the price below this level, we are going to rescue the euro. Of course, they want the Swiss franc to be cheap, let me say it, cheap against the euro because of exports. Switzerland wants to export as much as possible to the European Union, to Eurozone countries in specific. And that is why they don't want the Swiss franc to be expensive, because when it does, Swiss goods will look more expensive to buyers in the Eurozone. They don't want that to happen. They were defending a weak Swiss franc for a long time, and then they gave up. They gave up. They said, we can't do this anymore. We're going to leave it to the market. Since they said this in January of 2015, the price of the franc became, of course, stronger and rose against the euro, and we were unable to go above 1.2. The euro is 1.2 Swiss francs. We were unable to go above that for the euro, which of course means more weakness for the Swiss franc. Now, this might be the chance for the Swiss franc to dive. Of course, when it falls in value, that's good for the exports. So that's what Switzerland wants to see. And if it does dive, there is a very good opportunity here. And we have a very good setup that points to a possibility of, for once in a long time, for the first time in a long time since 2015, of trading above the 120. And that would make the SNB very happy, I assume. I assume that if they still think the way they did a few years ago, they would say to themselves, well, whoa, thanks for the gift, markets. We have been trying to get this thing above 120 for a long time, and we finally gave up. We gave you the decision-making power, and you decided to give us the gift of a euro Swiss franc rate that is above 120. Why am I saying that? Because if this is an ABC terminating around the 1/3, that means that chances of reaching higher above the top that this drop has started from are amazing. They are going to be great, but of course this is a very long-term chart. We're talking about one candle equals 1 month, so we need maybe a year, 2 years maybe, to see that happen. So it's not going to be in a month or two. Who knows? Maybe it will be after witnessing such moves. Who knows? But if things go the normal way, like they do most of the time, that's going to take a long time. Eventually, after having enough time to reach these levels, my assumption is that, and my prediction is that the Euro Swiss is going to trade above 120 on the long run. One of the things that I use when I suspect there's an ABC is to calculate the size of A and the size of C and see if they are related, okay? So wave A started, of course, at the top of the recovery attempt, which was 2005. And in my own wave count, it stretched down to 1184. So that's 820 pips, right, guys? 820 pips. Or let me get my calculator to make things perfectly accurate. Of course, guys, as you see, I always try to calculate things up here because I live with numbers 24 hours a day, and I love calculating things without the use of any help. But to make things 100% accurate, it's still early morning here, guys. I'm still not operating with full force. Minus 1184. That is, yes, exactly as we said, it is 821 pips. Now I take the top of wave B, of course the starting point of wave C, and calculate the same amount of pips down from that top. So the top was at 1477. 1477 minus 821, that is 656. Oh, so no, A is longer than C. Longer with, yeah, we needed maybe 100 pips for A to be equal to C. One of the tools that I use is to see if A and C are very close to each other. When they are, that encourages me to consider this as an ABC. But nevertheless, that we did not have that kind of confirmation. Nevertheless, having the price stopping very close to the 1/3 and having the two monthly candles of September and October in this shape points to the upside. Now, this is not enough. We need to see the price breaking this trend line. Now, in my own opinion, if we get this while not breaking below recent lows, if we start trading this month, it is at 11.55. We still need 150 pips. Of course, 150 pips on this pair are not 150 pips on gold. You know, they take a long time, very long time to be achieved, because the euro and the Swiss are very closely related. So that's why there are, if the euro is going up, the Swiss is going up. If the euro is going down, the Swiss is going down. And that leaves very little room for any changes in the rate between them, because they are related, you know, they move together. So the rate between them is not going to move in a volatile way. Nevertheless, 11.55 is our resistance. This is going to be very important when we want to see this. What are the chances of the Euro Swissy trading above 120 again? So keep this number in your mind, 11.55. And to make it even more important, as you can see, the SMA 49, this red line here, is extremely close to the trend line. That's why a break above 11.55 will be a double break above a trend line and an important moving average. And in that case, of course, it gives the break more confidence, more strength, and will be expected to result in a stronger move. Now let us move to the daily chart. This is why I do not trade this pair. I just want to read some of the highs and lows in recent days for you guys. Take this day for instance. The low is 10.11 and the high is 10.31. So for 24 hours, this thing moved for 20 pips. Okay, and as you can see, most of the days are around 20-30 pips between the high and the low. 9.92 to 10.24, that's 32 pips. Okay, sometimes you have days like these and you think, oh my god, this must be 150 pips, but when you look at the information, the high is 10.59 and the low is 9.74. That is what, 84 pips, around 84 pips. Okay, so this is when things get really violent, we see 80 to 90 pips on a day, but most of the days are like this. See, 30, 25, 35. Yesterday, for example, the high is 35, the low is 92, 42 pips. Oh, actually 41 pips between the high and the low. So the trading ranges, the daily trading ranges for this pair are extremely limited most of the time, and that is why I really do not trade it. That's the only reason. It's I have nothing against it. So the only reason for this, for avoiding trading these instruments, is that they do not generate a lot of market action. But keep your eyes on the 50s, guys. 11.50s, that's not 10.50s. We still need around 150 pips above this the current levels that we can wait for, and then if we get there, we need to see what the market is doing around these levels. It's a very important resistance in my own opinion, and the support. Now this is the resistance. The support that we need to keep our eyes on is, of course, the area with the recent lows. 3 monthly lows in 40 pips, 3 consecutive monthly lows in 40 pips, guys, between 8.12 and 8.52. This is the support. And when one of them gives way, I recommend following the direction of the break. Which one I think it would be? I think it would break to the upside. It will break to the upside. This is my expectation. And if that does not happen, of course, I will be willing to change my mind. I do not get married to analysis, guys. I do not get married to trades. When the market is telling me something against my expectations, I, of course, will follow the market, will follow the chart. I am a chartist, I am a technical analyst, and whatever the technical analyst is telling me is the thing that I should believe in, not my own opinion that I try to force on the market. So for now, let's get to even shorter terms. Let me use some indicators here. Well, the MACD is generating a buy signal here, but we are still trading below the moving average band. Now, if we break above the moving average band, I would recommend a long position. Although my expectation, Georgios, for this long position is maybe 20 pips of profit or something like that. Okay. We also have this. The moving average band is in the teens. We are very, very close to it. We are actually touching it at the moment as we speak. It is around 16, yes. We are at 11.12 right now, so we are talking about only 10 pips. And very close above it, we have a falling trend line in the 30s. Once we get above 16, and in this pair, I think 5 pips are enough. Let's say 21. If we get to 21, we can, in the 20s, early 20s, if we get in the early 20s, we can initiate a long position. And once we break above the 30s, that should leave us feeling better about our position. Okay. Now the MACD is positive. RSI is also changing direction to the upside slowly. We need to overcome this previous top on the RSI. If we do, that would be fantastic. Stochastics are, it did generate a short signal here, but now the two lines are touching again. And if the fast goes back above the slow, that would negate that short signal. We need that to happen in order to believe in the price moving to the upside. So I can recommend buying in the 20s, early 20s, at 21 for example. 21 looks good for a buying position with a limit that should be above 60. Let's say above 60. Recently we had two daily highs very close to 60 at 10.59 to be exact. 2 times at 10.59. I'm sure you can see this. This is it. As you can see, October 17th and then again October 28th. Okay, so if we want to trade above the recent highs, if the bulls believe they can push beyond that, what they need to do is they need to break above the moving average band and this falling trend line. It all starts with breaking above 10.16, which is only a few pips above current levels. If you see the price at 21, go buy and place your limit above 60. Where above 60? Let's try to find out. Do we have recent tops or bottoms? Well, if it might sound greedy, but that can lead to a test of the resistance we have been talking about, 11.55. So when you buy at 10.21 and with a limit at 11.55, that's fantastic for such a calm pair like the Euro Swiss. But maybe we can find something before that. As you can see, the 50s or the 59, which showed itself here and here and here and here and here and here and here, is a very important resistance. Once we break above it, that would and should actually lead to a significant move. If this happens, then a test of 11.55 would be probable. So what am I going to do here is buy at 10.21. Stop, we are going to talk about the stop in a minute. Limit at 11.55. 9.55. That's a great limit for such a pair. For me, the stop should be actually it should be below this level, but we cannot wait that much because that would leave us with a stop of more than 100 pips. So what I'm going to do here is I'm going to calculate retracement levels for this recovery attempt and count on them to provide support for our long position. If they do, we are safe. If they do not, then we need to close this position. How about that? Let me use my secret level, 71.4. Okay, and let me delete this one. We are done talking about the very long term. So this is the retracement that we need to care about. Retracement area, 9, 16, and 893. It is still a little bit too far, but it is even better now. It is better now. So 916, 10 pips below that is enough in my own opinion. 906, although we are still above 100. No, I don't want to do that. I want a stop that is less risky than that. I want a stop that is less risky than that, guys. And okay, how about a trend line instead of retracements? Yeah, now we're talking. You know, this is much better. This is much closer. If we break below this rising trend line from September 27th bottom, I don't want to be in this position anymore. This trend line is currently running at in the 960s, 963 to be exact. And of course, it's a rising trend line. This is a 4-hour chart, so every 4 hours, it's going to rise a little bit, maybe a pip or two. You need to check this trend line every now and then if you are planning on buying the Euro Swissy. So for now, I'm going to place my stop 10 pips below this, which is, of course, at 953. 1.953. That makes sense to me from a stop and limit perspective. These numbers make sense to me. So this is it for the Euro Swissy. I hope, Georgios, you found this to be useful to your trading. This is my recommendation, buddy. Screenshot it and keep it with you. I'm not going to trade it. I'm not going to act on this recommendation. But if you do, please let me know what happens to it. Are you going to achieve profit? I really hope so. Or if this recommendation does not work well for you, I want to know both ways, okay? So keep me updated, buddy. And one thing I always tell my clients, my viewers, is that if you do follow this recommendation, maybe I'm not going to talk about Euro Swissy in the next webinar or on a daily basis. So what I want you to do is this. I want you to follow this trade, and I want you to keep updating your stop loss level. This is a golden rule for me. If things go well, don't leave the stop where it is. And of course, I'm not talking about 10 pips or 15 pips. If you reach a good enough profit, I want to see you updating the stop to your favor. So if this, for example, if this trade reaches 50 pips of profit, you can move this, or even 40, you can move the stop to 5-10 pips of profit instead of keeping it on a loss of what, about 60, more than 60 pips, 68 pips. So this is the thing that I want you to do all the time. If you follow, everybody who's following these recommendations that I'm giving, when things get well, protect yourself. Do not let your winners turn into losers. something that is reaching 35, 40 pips of profit, that's it. You need to move the stop to a little bit of profit. And of course, if it gets better, you move the stop further into the profit zone. For example, if we are at 40 pips of profit, I place it at plus 10 pips. So the worst thing that will happen to me on this trade is to make a profit of 10 pips. And if it reaches, for example, 60, I will move that to 15 or 20 pips of profit. If the floating profit reaches 75, I would place my stop at a profit of 30 pips, and so on. Okay, guys? This is a great habit. If you start implementing this very simple rule, you're going to see that your trading results will be improving in front of your eyes. Okay, any other requests? USD JPY, and I believe we do have a chart for that. Yes. Remember, guys, what we said yesterday? Do you remember? We recommended an immediate short position. Immediate. I did not say wait for it. I said click sell right now. And as you can see, the price dropped about 70 pips since then. 70 pips in the past 24 hours after our short recommendation. We had many reasons to believe that the dollar yen is going south, and fortunately we were right, and our recommendation made excellent profit. Just look at this beauty. Look at this beautiful baby. Amazing. So after this drop, congratulations if you followed this recommendation. If you have made profit on yesterday's short dollar yen recommendation, kudos to you, and congratulations. And I really hope you enjoyed it, because it was one of the best recommendations given this week. About 70 pips of profit in one trade. That's great. In 24 hours, that is great. That is something to be happy about and excited about. If you did follow it, congratulations. Now the question is, what's next? This is what we are going to try to understand now. We are going to estimate the chances of the market going up or down from current levels. And I do see a couple of things that are not bearish. Can you tell me what they are? Can anybody tell me what they are on the chat? If you know your technical analysis, you know that we have two things from first look. Just by looking at it in a few seconds, you will note two things that are not bearish. The first thing is reaching the 50% level for the previous move. This is a fantastic recovery attempt, and after the drop of course was expected. This drop, the expected drop, has reached the 50% level with stunning accuracy. The level itself is at 107.88, as you can see here. The tool calculates the prices for me. So it is 788. Let's see what's the lowest price here. 787, people. When I see these things, you know, it makes me wonder what kind of magic is technical analysis. So we are exactly touching the 50% level, and moreover, what we are witnessing here is another touch on this trend line. Let me just look at this trend line, guys. The lower one, of course, I'm talking about the lower one. Let me color it differently so you know what I'm talking about. The blue trend line. Okay, forget about the black trend line. The blue trend line. One touch, another one, and an exact touch. That's why I'm not gonna wait. I'm not gonna wait, guys. I'm sorry. I'm going to buy dollar yen immediately. Okay, so why am I buying? Because we have stopped extremely close at a double support. This double support is built by a retracement to one of the key retracement levels for the whole move for October. This is a 4-hour chart. We're not talking about a 5-minute chart, guys. And the other thing is that we have a trend line running extremely close to this retracement level that stretches back to August, guys. So in both cases, we have an important support here. Even one of them, in my own opinion, would be enough to seriously consider a long position. And having them both very close to each other is the thing that I want to see in order to believe that there is a pretty good chance of going higher again after this drop. So now this drop, which was exciting yesterday and very expected, highly expected, looks corrective now. It looks corrective because of two facts. Stopping at the 50% level of the previous move indicates a corrective move, and stopping at trend lines indicate a continuation of the trend. So I am voting this one up. Let's go up, dollar yen. Let's achieve some profit today. So we are going back to the upside. This is my expectation. Now, I want to place a recommendation on the chart, but what I want to know first is where is my stop. I will calculate the next retracement level and see which one I can use, depending on my risk management, of course, which one I can use to hide, I love using this word, to hide my stop below. The immediate support is 107.88. There's no question about that. The next support is 61.8 level, which is at 107.55, and my secret retracement level is at 107.28. So I have the option of placing my stop below any of these three levels. Which one would it be? I don't like placing stops below immediate support levels because they are very close and they can be easily hit with any move in the market. So it is between the next one, 61.8, and my favorite retracement level, 71.4. So I can place my stop below 107.55 or 107.28. Between the two, I want to see which one makes more sense. Which one looks stronger? We do not have a lot of things that favor one over the other, to tell the truth. This bottom here is interesting, and it is actually, it's not extremely close to any of them, but it's closer to 28. So maybe I will place my stop below 28. 20 pips above that, if things are good. We bought around here, 28 to 8. That would leave me with 90 pips of a stop loss. But remember, guys, the pip value of the dollar yen is a little bit less than other instruments, which gives us maybe 10% margin that we can add to stop loss orders in terms of pips, of course. So if I place my euro stop at 70, when I place my dollar yen stop around 80, it's going to be around the same risk that I'm taking. Now, what about the limit? What about the limit? Of course, when you stop at the 50% level, the chances of reaching higher above the top that the drop started from will become very strong. And of course, we came very close to the 930 here, 930s. Remember, we talked about the 930s for so long recently. So breaking above the 930s, the next time we move higher, we should go above this high, which is 109.29. Now, when you are expected to go beyond 109.29 and you have a resistance in the 30s, then the chances of breaking the resistance in the 30s are, of course, large, because if I go above 20s and the resistance in the 30s, this is not technical analysis, it is common sense. How can I go above 20s and not break a resistance that is only 10 pips above that? Well, of course it can happen. Anything can happen, but you know, it does not make a lot of sense if I'm expected to reach above the highest point that I have reached recently, and there's a resistance level that is sticking to that high, then my expectations would be to travel higher and higher above that resistance. And in this case, we of course we had a limit and a target at 1016. So I would my stop would be below 107.28. 20 pips are enough, so I'm going to place it at 107.08. And my limit is very good. I like this limit. It's more than 200 pips. My limit is 110.16. Of course, the dollar is not having a great time, so reaching this limit may or may not be possible. And that is why, of course, there's always the reason why you should keep your eye on your trade. And as the market goes with you, achieves profit for you, you need to adjust your stop level in your favor. You need to lower your risk, not increase it. When I say that, some people, they think that you should increase the stop loss. No, of course not. What I mean here is you should lower the risk that you are carrying. Here we have a stop of 90 pips, okay? But as the market is moving with me in the direction that I want it to move in, I want to make these pips less and less. Instead of a stop at 90, if I reach 40 pips of profit, for example, 50 pips of profit, I want my stop to be at plus 10, not minus 10, plus 10 at a profit of 10 pips. So please keep your eye on this one, especially, I'm not going to be here 24 hours, of course. I see you guys for 3 hours a day, and then you are on your own for 21 hours of market. So I'm not going to be here to tell you what to do, but these notes will be extremely helpful. If the market is moving with you, you need to adjust your stop. And that is especially the case if we reach 30s again and fail to break the 30s. I suspect that we will break the 30s if we try to break it again. If we reach it again, it's going to give way this time. But we are still very far from that level. We are around 130, 140 pips below that. Maybe by the time we reach the 30s, the 930s again, that would change. You would look at the chart and you would see weakness signs after traveling 140 pips to the upside. So when we reach the 30s, the 930s, I want you to really handle your risk in a professional way. If you see weakness signs, close your position. We are more than at that price, of course. If we reach that price, we will be trading at more than 100 pips of profit. So close it. But if you see the price penetrating the 930s, then you leave the limit as is. Okay, this is our limit, guys, 1016. And I'm gonna add a note to make it even more clear for you guys. Watch out for 109.30s. Okay, so we can say 109.30s is target 1, for example. 109.37 is target 1, and 110.16 is target 2. Okay, so this is it for the yen. We are already in on the long side of the market. This is our first trade for the day, and I really wish you the best with it. Okay, guys, good afternoon, Aaron. Nice trade. Thank you very much, Aaron. I really hope that you are talking about the short dollar yen from yesterday, which made us 70 pips of profit. I really hope so. We sold yesterday in the 860s, and now when we started analyzing, we were in the 790s. So we're talking about 70 pips of profit. And if you are trading with the QTime FX, of course, the spread is only 0.4 of a pip, so you will not be giving much of that profit to your broker. Thank you very much for your kind words, Aaron. Harry is asking, how often are you doing these live training sessions during London session? Well, we start at 6 a.m. London time, and it stretches up to 9 a.m. London time. So the third hour of our analysis is the first hour in London session. If you prefer to have them at another time, please let us know and we'll see what we can do. Of course, guys, we want to provide what is good for you, what you find useful. So we have an overlap of 1 hour between our trading sessions and London session. If you have any suggestion, please shoot, and I promise you we will look into it. We will discuss that and see if there's a chance of moving these webinars to another time that is better for everybody. I have no problem. I'm available, guys. I'm a trader. I go to the market every day. I stay there. I watch the charts for most of my day, and I will be happy to do these sessions at this time, at another time. I don't mind any changes, but of course we need to discuss it with the company, and it depends on how we see what's better for everybody. But we value your feedback, so shoot if you have any suggestion. Harry, if you want them to be at another time, please do shoot your suggestion, and I promise you we are going to look into it, me and the management of the company. Okay, guys, with this exciting dollar yen analysis, we are at the end of our second hour. Now it is time for our second break of the day before the last part of today's analysis and trading session. I hope you stick with us for the third and last hour. It's going to be exciting because we're going to talk about more instruments that we did not cover so far. Gold moved to the upside yesterday, a very strong move to the upside, and we are going to look at that to see if that was expected, not expected, why did it happen, and the most important question, of course, is always what is going to happen next. We cannot talk about the market, what did it do yesterday, and try to explain that, try to reason that, but our aim here is to tell you what to do today. This is the most important thing. I want you to find the best trading opportunities, and that's why I'm giving you my best analysis and my time and my concentration and my focus on these charts, so I can provide you with great trading opportunities, guys, like yesterday's long euro recommendation or short dollar yen recommendation, which both made very good profit. So it's time for our second break, and meanwhile I'm gonna remind you that this free webinar is sponsored by QTime FX. I want you to show them some love, guys, and contact us, please do, at fx_educast via Telegram. We are waiting here to help you. We are going to help you with every step if you decide to open your real account with us. And of course, having you guys as our clients will help fund these free trading sessions, because it's a generous sponsorship from QTime FX, who are offering you fantastic spreads. Just look at these spreads on the screen with zero commission, and above that we are offering you $500 of free bonus. Okay, it is withdrawable. This is the magic word. It is a withdrawable bonus. So you guys enjoy your break. I'm gonna take 5, 6, 7 minutes, something like that, and come back. And when I come back, I am going to start analyzing the instruments that we did not talk about today. And of course, if you have anything you want to see analyzed, please let me know in the comments and I will sure take a look at it. Okay, guys, see you in 5. Okay, guys, welcome back. Our third and final hour for the day, and our third and final hour for the week. How's everybody? Let me check if there are any requests. Well, aside from the requests earlier, we do not have Mary. Welcome, Harry, Jaco, Aaron. Hello, everybody. How are you doing? Hi. So we still have around 1 hour to finalize this webinar and to reach an end for our week together. It's been a great week. I'm very happy to be with you guys for another week, and I really hope that you are using these trading opportunities that we are talking about and presenting in this webinar. Let me remind you again that this free webinar is sponsored by QTime FX, our generous sponsor. Please contact us, guys, at FX_Educast via Telegram. Also, we have Skype. You can contact us at Skype, at our Skype, if you want to open your account with us through FX Educast with QTime FX, the broker that is offering you fantastic tight spreads, amazing tight spreads, zero commission, great bonus, and above all, it is the broker that is sponsoring these free webinars. So you guys show some love to QTime FX because they are sponsoring these webinars. They are the reason why you are getting these trading recommendations free of charge, because they want you to make money, they want you to achieve profit, and they want you to be great clients, making money and enjoying success in the financial markets. So we welcome you to open your accounts with us. Please contact us at FX_Educast via Telegram. And now let us go back to the charts, guys. Let me switch to my charting. Okay, so we have talked about euro, Swissy, dollar, yen so far, and now something that I really want to look at is gold. Now, gold has not been very kind to me this week, unlike other instruments. Let's start with the daily, or even before the daily. What I want to start with is the monthly, guys. And I'm going to use another chart because I want to keep these there. So I'm going to use this chart to take a look at the shape of the, first of all, the candle or bar, and then we'll take a look at the monthly indicators, what they are telling us. Remove everything. This is a previous recommendation from earlier this week, of course, to buy at 503 and to have a limit at 508. Of course, it was reached and exceeded, but what's next? This is important. We expected the price to reverse around the 50% or maximum the 61.8% level, and unfortunately in both cases that did not happen. So let's start with the monthly, guys. I want to take a look at the monthly candle. As you can see, we have been rising for a while, and gains have been achieved recently in a fantastic way. If you are a gold bull, it was a great year. It is a great year so far for gold, the precious metal, and that continued until September, when we reached a level not seen in a number of years. actually since 2013 before dropping. And when we dropped, of course, we left behind a bearish candle reaching the highest price in any trend, and then closing on weakness is not something that bulls want to see. But this is what happened in September. However, in October, gold tried to recover, and it was a very impressive recovery attempt, but it did not reach as high as the previous months. The previous month, sorry, not months. I want to take a look at the indicators. All right. Well, this is flat. This cannot be a cross. We need some price action to the downside to say that it's a cross. RSI is also flat inside the overbought area, which is not very bullish, but it is not a weakness sign by itself. This is a trick here that not a lot of people understand. Just because indicators are in the overbought or oversold area does not mean a reversal is imminent. You know, the price can go on and on and on while the indicator is in the overbought or oversold area for quite a while before the market reverses direction. And this is the case here. Just because the RSI is in the overbought area and the stochastics indicator is in the overbought area, just because of that, that does not mean it is time to sell. Price may continue moving to the upside for a longer period, and we can see that this is happening, and this is a good probability because the difference between the two MACD lines is expanding actually, which is a strength sign. This is not a weakness sign. So the indicators are, you know, they are not pointing to the downside. They say that maybe, probably, we could be showing signs of weakness in the near future. But up until now, we do not have weakness signs on the indicators. A lot of new guys, especially the new guys, or even people who are in the market for a number of years, when they see this or this, they go and short immediately. Well, that is a mistake. That's the kind of mistakes that I don't want you to do. I'm here to make sure that you do not do these kinds of mistakes, guys. Okay, so don't do these mistakes. Stick with me here, and you're going to learn the right way to do everything. And yes, I mean everything, not only trading and analyzing the market, but everything in the world. Okay, so not a lot of clarity on the monthly chart. We don't have a strong reading like it was the case, for example, on the euro dollar with that bullish candle, the engulfing pattern. Here we do not have that kind of straightforward summary of the monthly chart. We don't have that, and that's why we are going to switch to the weekly, and then the daily, and then the hourly, until something interesting. This is the weekly chart, and the MACD looks like it is close to giving a short signal, but it did not yet. Okay, this is very important. It did not give a short signal yet. We cannot assume that it will without having that signal in our hands. Nothing yet here. The MACD is not giving a signal, but the stochastics and the RSI are both pointing to the downside. You know, on a weekly chart, they are pointing to the downside, which is should be something important. As you can see, we were in the overbought area and we started falling. overbought area, and then we started falling and we dropped below the limit or the border of the overbought area on both indicators. Now this is not a strength sign, but again we are going to look for more signals, because up until now we don't have that clear-cut kind of view on gold. And of course you can see why, because it has been dropping for a while and it indicated weakness, and then it started rising again. If you connect the dots, of course you can say to yourself, well, the Fed is cutting rates. Even if the chart is pointing to the downside, it may be hard for euro to fall under the current American monetary policy. So the daily. I love to take a look at every time frame from 5 minutes to weekly all the time. But my favorite is, it's not my favorite, I'm not going to use that term. One of the time frames that I really care about and want to take a look at all the time is the daily, of course. On the daily, as you can see, after yesterday, we have more than one thing pointing to the upside. First of all, just take a look at this movement above the moving average band. As you saw previously, we talked about this one, and this was one of the reasons why we believe the gold, the precious metal, is going to the downside, and it did, it really did. But we had a change of heart here for the precious metal. It stopped falling and it started rising again. One of the reasons why we said that gold is expected to fall in recent analysis sessions is that we have a shooting star here, obvious shooting star, and it happened inside the moving average band, and after that the price started dropping with no part of any candle body in this area above the top of the moving average band, which means that the moving average band acted as what, guys? As a resistance area. Now this resistance area was broken yesterday in a violent, very violent way. Look at this candle. It had no mercy on the bears. Okay, it crushed the bears and it continued moving to the upside with a close above the top of the moving average area. In my own opinion, the close of yesterday was a buying signal. It's a long signal. And now we are approaching last Friday's high, which is, I think it was 15.18, only 5 cents below that, 15.17.95. And now today the highest price is 15.14.45. So we need around 35 pips to reach there, exactly 35 pips above today's current high, to reach the high that we saw last Friday. And then we can see what gold is going to do. A failure around the same level for a second time in a week, that is a weakness sign. But penetrating this area that stopped us last week and forced the price lower for more than almost 400 pips, almost 400 pips, just a little bit less than 400 pips from this top here to this low here, Friday's high to Wednesday's Fed low, just a little bit more, 400 pips. So if we penetrate this top that managed to push the price lower this hard, that is extremely bullish, guys. So we need to keep an eye on last Friday's high. This is my opinion. And remember yesterday, we first drew this trend line and then we said, no, we're going to use this trend line because it makes more sense. Yes, and yesterday with the breaking above this trend line, remember we talked about 1504.45 or 55, something like that. We said that this is the resistance to watch, and if we break above it, then it is a long signal. I hope some of you guys followed that advice, because as you can see, we are currently trading almost 100 pips above that. So it looks bullish, of course, and with a break above this trend line and the moving average, we still have one hurdle to overcome. In my own opinion, it is last Friday's high. And as you can see, recently we have been facing problems around the 1520. And I'm gonna point out to 3 daily highs very close to this area. Now we have October 3rd at 1970. We have October 10th at 1701 and October 25th at 1795. So in this area, as you can see, we have a number of daily highs that is stopping the price from moving to the upside. The top of this area is 1970 with only 17 pips between the top of, or the high price for October 3rd and October 25th. We really need to pay attention to this area between 18 and 1970, 17 pips. And between them, between these two horizontal red lines, this is where the magic is, guys. Another failure in this area, of course, will be expected to result in a move to the downside and a good shorting opportunity, but penetrating this area with a number of pips that is enough to indicate a break should leave you looking for an opportunity to buy, not to sell. Okay, so above this area, I'm going to buy, and above last Friday's high, which is 17.95, let's call it 18, I'm going to recommend a long position. So buy at, let's say, with this kind of bullish behavior that we saw yesterday, I'm not going to wait more than 10 pips above last Friday's high. So 15.19 is my long position. Now, the stop here is going to be tricky. Why is that? Because, guys, we have seen a strong move yesterday, and have a stop that is very close to our entry level would probably leave it hit very easily. So with the big move that we have seen yesterday, we need to be a little more flexible in specifying what level can we place our stop at. So buy at 15.19. Now let's look at the stop. For that, I would change my time frame to 4 hours and then to 1 hour, looking for a probable support that can save gold if the price is trying to, if the bears are trying to push the price lower. Honestly, guys, with this one, yesterday's high, I'm going to change my mind. Yes, I'm gonna really change my mind. All I need now is a break above 14.3, and that leaves me with 15. 15.3, that means for 15.5. So we have adjusted our entry level from 15.19 to 15.5. Okay, I'm gonna place it here. Buy stop. Sorry, and place my order. I'm gonna adjust, of course, the order for stop and limit, but I wanted to place it very fast in order of a sudden move or a fast move. Okay, so 15.5. My stop, unfortunately, it needs to be a little bit large. So before breaking below this trend line, I don't recommend giving up. And as you can see, the moving averages are approaching this trend line. So when the three meet, the moving average 35, 49, and this trend line, they will form a strong support area that we need out if we are long or if you are thinking of going long. So Where should we place our stop? This is the main question. Another reason to believe in this area is the rising trend line from October 29th low earlier this week. Forget about this Fed move that turned out to be a nothing burger. Let me use this term. It is also pointing in the same direction. When the NFP number comes out, these levels will be around 97 and 1500. So unfortunately, the stop is going to be above 100 pips. There's no other way around it, guys. If you don't want to take that kind of risk, I think that placing it below the lowest price seen in the last 24 hours is okay. It's okay, but it's not really what technical analysis is telling us. You can use 1508 as a support. If we break, for example, 20 pips below that support, you can place it at 1506. And that would be, of course, it looks much better for risk management, but is that what the technical analysis is telling us? I don't know. No, it is not. However, risk management sometimes make things hard to place the stop where you want to place it, because I don't want to lose 150, 180 pips on one trade. So I'm going to use the 1506 as my stop. And as you can see, I'm changing my mind, and I'm of course thinking out loud, talking to you guys, and you are seeing how we change our minds when we think of the market, because we have a chart, and as we read the chart, this chart is pointing to different things. So now a buy at 15.5, a stop at 1506, things make sense. Where is my limit? Of course, if I start rising, I would expect the price to challenge, first of all, the area between 1518 and 1519.7, and because we have a bullish atmosphere, we should expect the market to go beyond this area. So I'm going to look for the next resistance area and place my limit at. Very simple techniques I'm using here, guys. Very simple techniques. In my own opinion, this level, this high here, is the lowest thing that you can think of as a limit for your long position, which is at 2683. At 2683, let's call 26.8, we will be having a profit of 113 pips. 113 pips, that's not bad at all, but what could make a better target is the second touch on this trend line that we were counting on, and that is 35.7. Now you're talking. Let me put it this way, target 1. How about that, guys? I think that this is a good recommendation for today. If we start trading above 1515, the price will be expected to continue moving to the upside. As you can see, the bulls are very strong, and with this, just this last 4-hour candle shows you how strong they are. We had 4 candles with small bodies in this area, and then with one candle we are breaking above the 4 bodies that are witnessed or were witnessed in the past 16 hours before the start of this 4-hour candle. So this is it. This is our gold recommendation for today. So Munther, do you have a short recommendation? Well, of course, there's always a possibility of the market moving in any direction, but I would not recommend shorting gold before breaking the support area that we talked about. You know, we had a rising trend line. Let me show you on the chart. We have this rising trend line from October 29th. and the falling trend line that we were counting on yesterday, and the moving averages in between. So without a break below the bottom of this area, currently the bottom of this area is around 96, and the next 4 hours, of course the next 4 hours are important. Why? Because they are the 4 hours, the candle which the non-farm payrolls number will come out during. So the next 4 hours, it is going to be around 97. The bottom of this area is 97. Without a breaking below 97, I would not think about shorting gold today. Okay, guys? If we do break below 97, probably 20 pips below that would be enough, like 95, 14.95. That would be a reason to go short on the precious metal. If I had to, I don't want to give a recommendation, but if I had to sell at 1495, my stop should be above the top of this area. This area is 1500, so 20 pips above that, stop at 1502. That means 70 pips of a stop loss, and of course the limit should be another visit to 1481, the low, which was so on Wednesday after the Fed. So target or limit 1481. That is the signal, the short signal that I would give if I had to. But the signal that I like to give without having to is this one: buy at 1515.5. Stop at 1506. First target is 1526.8. Second target 1535.7. Okay, guys, it's fantastic. It's amazing to have you with us for this week. We still have time for one more instrument. So what is it? What do you want me to analyze, guys? Brian is asking about QTime FX. It is in Singapore, buddy, a regulated broker, and please let us know if you want to open your account with us. As you can see, buddy, we have fantastic spreads, bonus, no commission, trading opportunities that are provided to you on daily basis in these webinars. So you have fantastic combination of things that should work to your favor and make it easy for you, or at least easier for you, to make profit in this market. Okay, guys? We have time for one more. What do you want me to analyze, guys? How about the pound? We haven't talked about it yesterday. Okay, so the pound, and of course, as we have been doing all day, because today is the first day of the month, what we did with every instrument we talked about is taking a look at the monthly chart, looking for monthly patterns. And as you can see, we do have a very strong bullish candle on the monthly chart for the pound. As you can see, we have been rising all month long. We opened, and from the open to the close, we were rising. You know, the open is very close to the low, the is very close to the high. That is very bullish. That is very bullish, guys, and it means something. But having said that, I can't help but notice that this amazing candle, this monthly bullish, strong, fantastic candle, has stopped almost exactly at the SMA 35, one of my favorite moving averages. Which means that the bulls, who were having a great month, were unable to break above this moving average. Now, we need to break above this moving average in order to keep going. You know, it has been great. We have 3 green candles on the monthly chart, as you can see. The first one is, it's a doji. Is it a doji or a doji? I've heard Steve Neeson, I think he pronounced it doji. So it is a doji or a doji, whatever you like. And after that, September was good, October was better. Now what we need to do is we need to overcome this moving average area, because look at this recovery attempt, guys. It looks very similar. We had a doji and then a good candle which topped almost exactly at 35, and then we tried to penetrate before giving up and falling again. This could happen again because the moving average is, or the moving average band in this case, because I like using bands more than using single moving averages. The moving average band in this case is the area that is providing dynamic support or resistance. In this case, of course, it's resistance, and without breaking above it, the strength will continue to be limited. Okay, so we need to break above the top of this area. The top of this area for this month is going to be around 32. And I think we do have a retracement level in this area. We're going to talk about this when we get to the daily chart. So, what about other indicators? What do they say about well, stochastics and RSI are both generating a buy signal, and it's not even from this month. I think it's from the close seen in September. Probably it was better to wait a little bit, but the signal itself was generated on the close of September, not October. Again, as you can see, these are very good readings, but not overcoming the moving average is not very good. What about the weekly? What about the weekly chart? As you can see, last week, previous week, was an attempt to go lower, but it could not overcome the fact that in the previous week, we have broken above the moving average band. Just look at this, guys. Trading below the moving average band for months and months. And then we attempt to break above it a couple of weeks ago. Did not succeed in that. A top inside the moving average band. But then, boom, we break above it. Now, after breaking above it, the atmosphere is bullish, because now we are just trading above the moving average band. So the week, sorry, not the month, the week in which the bears tried to attack and force the price to go below the moving average, they were unsuccessful because they don't have enough power now that the price is above the moving average. And that's why they gave up after this pathetic attempt to push the price lower, and the bulls took control again this week. So this week looks good up until now. Of course, we have the NFP. The NFP is not as important as the Fed, but it still can, and it did in the past. It was a huge influence on the price. These days, it's not as strong as it used to be, but still we need to watch it. It's going to come out in a few hours from now, less than 5 hours. And of course, a good number or a bad number can change the shape of this weekly candle here and the daily candle as well. What I want you to do today is I want you to take a look at all the instruments that you are interested in. Take a look at the shape after the market close. take a look at the shape of the daily candle or bar and the weekly candle or bar for every instrument that you are interested in. We're going, of course, to talk about this on Monday, how the week closed, what kind of candles and bars did this week and the day left behind. And then, of course, we are going to continue analyzing the market using these closes as indications of strength or weakness depending on where we close. So today's close is very important. First of all, it is the close of a month during this week. It is also a Fed week, and it is a jobs report week. So it is one of these weeks where the weekly close is extremely important, and of course the daily close is also important. But the focus for today, and what I really want you to pay attention to, is the weekly close. I'm gonna, of course, after the market closes, I'm gonna take a look at the weekly candle for every instrument that I'm interested in, and the weekly bar, and of course that would be an indication of strength or weakness for next week. Okay guys, so the weekly chart looks better than the monthly chart. Now what about the daily? As you can see on the daily chart, we have been trying to recover all week, but with limited gains. The gains that we were looking for came in limited units. Every day we have achieved a little bit of gains for the pound, of course, for this pair. It's rising a little bit on every day of this week. Today we need to see if this is going to be the case, or if after a number of green candles we're going to have a red one. It depends in a large part on the NFP number that is going to come in the next few hours, coming out in the next few hours. Now, this top from October 21st is also very important. Okay, and we need to overcome it. As you can see, the 130 psychological level is not easy. Okay, so here it is. As you can see here, the daily high is very close to it, 29.90, 29.86, 30.13, 30 exactly, and now we are getting closer to it, 29.76 here and 29.73 here. So we cannot neglect the importance of this psychological level, even if it's not a retracement level, or if there's no trend line in this area, we cannot neglect it. So I will assume my resistance to be at $1.30, the psychological level. A break above this level should result in a continuation of these very serious recovery attempts, and if we do, up until now we have a 3, and 3s are not very promising. This may be an ABC, okay, and then we drop. This will completely change, guys. It will completely change if we start trading above the top of wave C. That would change the wave count to this, which is extremely much more promising. Okay, so when we start trading above this previous top, this should be wave 5, and usually wave 5 relates to wave 1 in size, given of course that does not leave wave 3 as the shortest between them. So wave 1 from around 1950 to around 26, more than 600 pips, a little bit more than 600 pips. If this is the start of wave 5 and we have 600 pips of the 28, that will leave us getting closer and closer to 30. So this can be like this. this can end up around these levels. Okay, that is much more promising. The promise of getting at least closer to 34 starts with breaking psychological level 130. So there is a chance of at least 300 pips if we break above the 130 level. Now, this by itself, of course, is a projection. It's not enough to to build a trading strategy on. Just a projection. We need to see retracement levels. We need to see previous support and resistance levels. Okay, let me calculate the retracement levels for the whole move down from 2018 high. Was this the 2018 high? Or yes, it was. Yes, it is the 2018 high. And let me get it precisely at the top and bottom. The top here, 43.77, and the bottom here is 19.59. Okay, we have penetrated. No, we have not. Sorry, we we have not penetrated the 50% level. I want to see where the 50 and 61% levels are. As you can see, the 50% level is at 30.68. We do have previous resistance around this level. Just look at these beautiful weekly highs, guys. Look at this one, 31.71. Unbelievable. 3 pips away from our Fibonacci level. 31.77, 9 pips away. And of course, older prices, 31.75. It is so obvious that this is a strong resistance. 31.68, keep the number in your head, guys. And if we manage to penetrate that, we will be getting closer to an equality relationship between wave and life. And that, of course, leaves us much closer to the Fibonacci 61.8 level at 34.53. Okay? So, two important areas that we need to care about. The first one, it's obviously an interesting resistance, 31.70s, or if you want to be counting on the retracement level, it's 31.68, very close to the 70s. And the other is 34.53. In my own opinion, we can now 20 pips above 30 is enough, in my own opinion. The stop, we're going to talk about that in a minute, and the limit is 31.68. I don't want to be greedy. I think the price can push beyond that, but it is an important level that we need to respect, and maybe the price will not break above this level. So this is our recommendation for today. What about the stop? For the stop, we really need to go back to the hourly chart. If we fail to break above 30, of course, that would not be good for any bullish expectations. If we use this trend line, does not look useful. Another trend line, this is better. Retracement levels for the whole recovery attempt, or the last part. I prefer to use the last part in this case. Okay, so if you want to follow real technical analysis without a break below the 61.8 level at 28.94, we cannot give up on our long position. If we have a long position, we don't have any kind of position up until now, but we may have once the price is above the 130 level. But if we had a buy, the stop should be below, maybe 20 pips below here, so 28.74. That, of course, is extremely large. We are talking about approximately 150 pips of a stop, 146 to be exact. and that is too much. One of the closer levels that we can count on our stop is, of course, the 38.2 level. Why is that? Because as you can see, guys, for the past 24 hours or so, we have been trying to drop only to find support at the Fibonacci 38.2 at 29.95. So I can use this level 29.95, 29.25 as a level to build support, to count on this level in my trading. So 29.25, I'll make it 29.05. That is still above 100, but it is better than placing it in the 28th area. So this is a recommendation. Of course, guys, when you see a stop like this one, it's 125 pips. You need to calculate the right size of trading in order to make this loss, in case it happens, in case your stop is hit, to make it 2% of your account. Don't make 125 pips 7 or 10% of your account. And that may need you to lower your trading size just a little bit from what you are used to. If you are used to one lot with stops of 70 pips, for example, when it's 125, you can use 0.6 or half a lot, something like that. And that will leave the dollar value of 125 pips of stop as it is for 70 pips when you are, or very close to that, when you are using a whole lot. With this, guys, I can't believe the whole 3 hours are gone for the day. We had a number of recommendations. Please follow them and let me know what you think of them on Monday. For today, 2 things I want to leave you with. Follow the NFP number, and not only the number, how the market understands this number to affect the Fed decisions, the future Fed decisions. And the other thing that I really want to leave you with is please take a look at the weekly close. After the market close for today, just go to the chart of the instruments, the charts of the instruments that you care about. Take a look at the close, see what it indicates, weakness or strength on a weekly basis. Okay, we're talking about the weekly basis, guys. Okay, so with this, I will leave you, wishing you the best, and with the promise of meeting you again on Monday. I really hope to see you guys on Monday again, and to spend more time with you next week, looking for great trading opportunities like the ones we saw yesterday on the euro and the yen. And today's recommendations, of course, I want you to follow them. I want you to keep your eye on the market when the NFP number comes out, and let me know what do you think, what happens to these recommendations. We're going to talk about them on Monday. Have a great rest week, because we still have 13 hours of trading, or actually 12 hours of trading this week, and we have an NFP number, we have weekly closes to care about, so we are still working. It's not the weekend yet. Okay, and after that, I really wish you a fantastic, relaxing, happy weekend. Recharge yourself, take some time off the market, spend your time with your family or doing the things that you like most. So come Monday, you will be recharged and ready for a new week of profit. Okay, guys, see you on Monday. Have a great weekend. And as I always sign off, good trading and good luck, guys. Thank you all for being here. And the last thing I want to leave you with is, of course, a reminder and a thank you to our generous sponsor, QTime FX. These webinars all week have been sponsored by QTime FX, our favorite forex broker, who is offering you fantastic spreads, zero commission, a great bonus, and other benefits, including, of course, these free trading sessions, these free recommendations for you on a daily basis. So we love you. and we hope that you will love us back and open your account with us. Contact us at FX Educast via Telegram, FX_Educast via Telegram, and we will be extremely happy to help you with the opening account process. For now, have a great rest of the day and a fantastic weekend, and see you on Monday, guys. Love you all so much. Thank you for being here. See you next week.